What's going on, traders? It's day number 16 of the $1,000 account challenge. We're up $38 in the account. Previous balance, $1,123.83. New balance, $1,157.47. This is not including commissions, so it's going to be a little less than 38 with the commissions. I took two trades today, though one was break even, and my trades both were on Apple. So the stock opens up way down here. Your previous day's closing price is way up here. Straight off of the day trade watch list, Apple was a long idea above $222. Looking back at this, I probably could have taken an entry much earlier than where I did. I took the entry way up here. Yes, it feels like a chased move, but I'm going to explain why. I probably could have taken the entry here for the rally up to the previous day's closing price, though I will admit, at this time, I was not convinced that the stock was going to rally all the way to the previous day's closing price. What I needed to see to convince me to take a trade on Apple was not only a break of your previous day's close, which would mean the stock is going from red to green. This is a red to green move. If you don't know what that is, look it up. I needed to see not only that, but also I needed to see it pull back and hold 222 as a point of support. And so we get a 2-candle pullback and the hold, and the stock starts to rally. And at that time, I made the decision, well, hey, I don't want to miss this move. It's showing relative strength against SPY, which at that time was consolidating. Let me go ahead and take the entry. So I go long on Apple here with a stop loss placed at the previous day's closing price at 222 somewhere in this area. And it's just a matter of holding through this trade. I was red at one point, but again, it's trusting the analysis. The theory behind red to green moves is that when a stock reclaims the previous day's closing price after gapping down, it's supposed to continue to hold the previous day's closing price as a point of support. And so we get the move down. Yes, I was red, but I'm not scared out of this position because I'm trusting the analysis that I did for myself, which is red to green move. It should hold. It does hold. I hold through the red. We get the move up into the high of day, and I take the profits there. That's going to give me that $38 gain on the day. Now, I do take a second trade on Apple, but let me tell you why I didn't take the dip entry here. That is on the back side of this trade. This would be the front side of the trade, uptrend trend line. Uptrend trend line is broken. The stock makes a lower high here. So this is your high of day. Makes a lower high there, then makes a lower low, as well as breaking the uptrend trend line. So that's why I'm not taking this trade on this dip entry down here. But what I noticed is that because it was making lower highs, I can draw a downtrend trend line like this. Then you have a lower high, and then now break of the downtrend trend line and a higher high. Again, at this time, I'm not convinced that it's going to reclaim the previous day's closing price. So I need to wait and see, is it going to break over? And when it does, I make the decision to market buy into the strength, into this candle, and immediately I'm red on the trade. Gosh. I probably should have cut the trade when it pulled back, but I was willing to give it room because I was already green on the day. At this time, I'm only trading with house money. So I knew at the very least I would end the day with a green day, even if this pulled back, because I was willing to cut the trade before I gave up all the profits from the previous trade. But the stock pulls back and holds this purple line as a point of support, which is VWAP. It's an indicator. It becomes relevant around this time. And this previous support area here acts as continued support over there. So because we technically get a higher low, so this would be a lower low, this would be a higher low, because we technically get the higher low here, I hold through this position, we get the break of this downtrend trend line, and the rally up. So we get a higher low and a higher high. The catch is, with this position, because I did not average into the position, and because I had to hold through so much consolidation, theta, which is premium decay over time, was burning my premium on my contracts. So even though I did sell the position up here, it was only back to break even at that point. So I get out of the trade with no gain, no loss, the exact same entry price that I took over here despite the stock printing higher highs. And I only lose money on this trade because of my commission fees. So I really don't have a lot of constructive criticism to give myself other than maybe I didn't even need to take this second trade because it wasn't really worth the headache of holding through all of this consolidation, and it definitely wasn't worth the headache of this rallying back up just for me to get out at break even. I felt like I did a lot of work for no reason over here because I didn't add anything to my day. I only paid commission fees and I added stress. If I had to give one great learning point about today's trade, it's this. Sometimes one and done is all you need. That wraps up day number 16 of the $1,000 account challenge. If you'd like to participate, it's not too late. You can join at any time with any amount. To join the server, you're going to have to join via the WAP. The link is going to be in the description of this video. Hope the video has helped. Looking forward to seeing you on the inside, and I'll see you tomorrow when we continue the $1,000 account challenge. Cheers.